time to get started. Eric, do you have it on?
Yeah.
Okay. We'll call the meeting to order. We have a quorum. There's 5 of us here, so we have a quorum. So always the first order of business is going to be we stand, recite the pledge, and we'll have a brief prayer. Okay? I pledge allegiance to the flag of the United States of America and to the republic for which it stands,
One nation,
under God, indivisible, with liberty and justice for all. So a brief prayer. Thank you, Lord, for letting us to come in a free country. Help us to be good stewards of the money that you give us. In the Son's name we ask it. Amen. We only have one order of business tonight, and that is the financial workshop by Lydia. Lydia is asked to give us a financial workshop since we have 3 new board members. And this financial workshop will help us understand the financing as we move forward over the next month to complete the bond and complete the cost review of the AEI's proposal. So with that, I'm going to turn everything over to Lydia, and she'll give the financial workshop. We're going to keep questions to 0 until she gets through, and then we'll ask questions.
I'm gonna
So she'll
move up
just,
here a
and,
little bit so I don't have to stand, if that's okay.
Eric has been very good at getting his microphones and taping, so we hope that this works efficiently.
Okay, so I think what we'll do is we'll just go page 1 and we'll just go through that. So what I asked Sharon to give you all for tonight is basically a copy of the financial statements that you are going to be getting, or you have been getting every month, and we'll go over that in detail.
Can you okay?
Is that an extra one over right there?
You're okay?
The blue folder?
Oh, sure.
That's an extra one, yeah. Thank you.
All right.
Okay. And then, there's one investment report, which is separate from the financials. We'll go over that and I'll explain to you what that is and, who's the board, secretary, treasurer? Okay, so let's get started. So, starting on the first page, which is our compilation report, what the compilation report basically says is that we have taken the information that has been provided by y'all and created or put it in financial statement format that is in compliance with the AICPA and the GASB, JASB, and the governmental. And although it says that we're not auditing or reviewing or opining on these financial statements, basically it just says that we provide no assurance, okay? That's what that says. It also says that we're submitting, or we've submitted in the set of financial statements, financial information that is required by by GASB, and which they refer to as required supplementary information. For you all, that required supplementary information is the budget versus actual for the general fund. Okay, so that's page 1 or page 5 in your report. Okay, so let's move on to the financial statements. I'm going to start with the lowest level and the one that's probably the most relevant for y'all. So if you go to page 15, 16, and 17. And this is the required supplementary information that we refer to on the compilation opinion report. And basically what this represents is the operating statement for the general fund in detail as it compares to the budget which you approve and adopt at the beginning of the year. Okay? And so, actually starting on page 14. So, and this is the general fund. And I think I mentioned to you at the last board meeting that the general fund represents the fund that holds your water and sewer operations. It also collects the M&O portion of the taxes, M&O being defined as maintenance and operations. And anything that goes into this fund can be used for anything, as long as it's legal. I think I have to specify that, since we have our attorney here. So, your main components for the general fund are your water revenues, your sewer revenues, the M&O tax revenues, miscellaneous income such as rent from Bio Vista, the city of Bio Vista, and reconnect fees and late fees. And what you see on page 14 is the year-to-date is in column 1, which means for last month through April, that was 7 months. The fiscal year starts in October and ends in September, which is just a few months down the road from now. And so this is year-to-date for 7 months. It also has your year-to-date budget. And all I do for the budget is I take the annual budget, which is on the column that says 2017-18 budget, and then I just prorate it out for 7 months, okay? And for most revenues and expenditures, that's works okay. The only one on the revenue side that it clearly doesn't work on is the M&O taxes, because collections on M&O taxes, the bills go out in October, and most of the collections are collected in December, January, and February. So, you know, your budget versus actual variance is gonna be way on the positive side until we get further on into the year and we amortize that budget, which is evenly for, in this case, for 7 months. So what this shows is that for the first 7 months of the year, our total revenues were just under 1.3 million. And our budget is 1.12, so we have a positive variance of 178,000. Your total budget for the year, for the general fund, for the revenues, is almost 2 million, 1.9. And we adopted that, y'all adopted that in August of last year, or the September board meeting, okay? And then the last column is just showing you what the remaining budget is. And you can see that you still have amounts yet to be collected other than the M&O taxes. Our budget for M&O taxes was 425, and we have already collected 448 through 7 months, so we are already over, we have collected more than we budgeted for. So that's your general fund revenues. Starting on page 15 are your expenditures. Year to date, the water component of your operations is 164,000. We budgeted 168, so we have a slight positive variance of around 3,700. Your total budget for water is 288,000, and so we still have about $123,000 left to spend in that. So we're looking pretty good on the water side. The next category is your sewer operations, and our year to date is 215,000. We budgeted 183,575, so we are over budget as of the end of 7 months by 31,000. And you can see by the negative in your variances that we have spent more money than we have budgeted for, even for the total year, under sewer plant repairs, sewer plant equipment, sewer line, lift stations, and then your STP permits. So when we close out the year in this category, we will be over the budget. The next component area is your general operating expenses, and the general operating expenses are salaries for your 3 operators, Randy and his 2 staff, along with all related payroll expenses, retirement. We also have plant insurance in this category, small tools, health insurance related to those three guys, backhoe repairs, vehicle maintenance. In this particular, we have engineering in here, but I think in this month, we have reclassed that into capital outlay, so that's why we have that.
That's a question I was gonna ask you.
Yeah, so we're gonna reclass that. Lawn maintenance, telephone, and fire hydrants. So that category is showing 206. We budgeted 200,000, so we just have a slight negative variance of 6,200. Our total budget for the year is 343, so we still have 137,000 to spend between this month and
And
year
with
to
that,
date.
with that adjustment,
It's
you're
gonna
in the
go in the other way,
positive,
yes, it'll be a positive. Okay, and then moving on to page 16, this is our, what we identify as general and administrative. And then in this category, we have salaries for your two office personnel and related expenses, payroll, retirement, health insurance related to those two employees. We have, also we have our, other insurances, we have workers' comp insurance in here, we have directors' insurance, we have flood insurance, we have utilities for the building, election expenses, we have general insurance, accounting fees, legal notices, billing fees. Billing fees are related to the software.
we mentioned this before, but it's a different schedule here. So, legal fee bond issuance,
Oh,
those are
yes.
election fees.
Yes, and we
Uh,
set up a separate category for that, so that you could see how much expenses you're
Those are
incurring.
election fees.
Oh, these were for election fees?
There have been no bond
Yeah,
expenses,
that-
there's no
yeah.
bonds have been issued.
Yeah, I have a lot of
Oh,
question marks.
so
but-
this one, I need to change that to say, the
Election.
bond election.
Yeah.
Yeah.
Okay.
That's what I'm not asking, yes, but I got question marks,
It's, this isn't your regular report,
Right.
so it's, they tried to categorize that,
Right.
those items.
I'm gonna change that to read bond election costs.
Well, there was also a director's election, so those are just election fees. And
Just
I'm
elections.
certain that all of those were rolled into one. Election matters, election fees, however you'd prefer to see them.
Okay. So just all elections, okay. I'm just gonna put election. Building maintenance for this administrative building, director's fees, the conference fees that we have, the AWBD, which are 2 every year, regulatory fees, and any miscellaneous expenses and maintenance agreements. So we are at 270. We budgeted 181.7, so we are 88,000 in the red in this category. We have a total budget of 311, so most likely we will be over budget in this general category of general administrative. The last category, which is on page 17, is basically your capital projects. And this is where we put our non-recurring major projects activity in. So right now, we've got the waste recovery system, expenses in this area, a small amount for park landscaping, and then just general capital outlays.
Is
So,
that the engineering you were talking about?
yes, that's part of that, yes.
Well, I'm sorry,
It already no,
you didn't tell me when we could.
When's overall gonna, I'll make a note or two, we'll all ask questions,
Yeah.
just so she can get a flow of
Right,
going through it.
Okay.
Yeah.
That's
Just
why I'm
to
not asking
clarify,
questions.
what she
Yeah.
mentioned earlier about the engineering costs being applied to capital projects, those are engineering costs associated with capital expenditures that you can finance through bond funds. And so you can actually not come out of operating accounts but use your capital projects funds, which is, you have 4 accounts,
All right.
and
Yeah, that's one of my
we've discussed it
questions.
before.
Yeah, I was gonna
And we can
ask her to
clarify that,
talk
but
about
that's,
that in
I'm just
detail.
tying it back in there.
Oh, okay.
Okay.
So this is your budget versus actual, and historically, this board has looked at these set of financials, because it's the one that's comparing it to the budget. So usually we go over this every month, not necessarily in detail, but in certain categories.
The budget's
Okay.
actual, okay.
Yes. Because the only one that we really do a budget on is the general fund, which we do earlier at the beginning of the year. Okay, so in addition to the budget versus actual, on page 9 is basically the same general fund that you see in the budget versus actual, but this is just provided to you a little bit presented to you a little bit differently, in that it gives you current month's activity and then the year-to-date. So the year-to-date numbers are gonna be the same as you see on the budget versus actual, but if you wanna see what happened during the month, then you can see what the current activity was, okay? We don't have the budget set up on this one, but it's just current month activity and a year-to-date. And so this kind of gives you an idea of what your monthly expense, what the monthly expenses look like, okay? So I'm not really gonna go over that.
So this is reflective of Sharon's daily ledger, essentially, or
Yes.
monthly, okay.
So.
Information
so
she'll send to you.
We use QuickBooks Online, and the QuickBooks Online, she enters in the day-to-day entries for deposits. So she'll enter in the deposits, she'll enter in all the checks that were written for all funds. And then because it's QuickBooks Online, we have access to that, and we pull that up, and there's a general ledger out there, and then from there, we get the bank statements, and we reconcile the bank statements. We get the investment reports from Texpool, and we record the interest earnings from those statements. She provides us with the billing reports, and we journal entry and the revenues and expenses, the related revenues, and allocate it out between water, sewer, late fees, reconnect fees. And it also provides us the information to identify how much customer deposits are on, and I'll get to that in a minute. And we do the journal entries to record the tax revenues that have been collected in the tax count, which I'll get back to. And from there, we go in there and generate the financial statements from that.
Could you clarify the end of the fiscal year?
Do we what now?
These are all end as of April 30th.
Right.
Can you clarify that that's the end of the fiscal year or not?
I said that it was 7 months through April 30th.
Yeah. Okay.
I
Well,
mean, was that your question?
it is because you have 12 months prior, but that is not the actual budget of
12
for the
months
fiscal
prior.
year. It's all right. I'm just clarifying.
Oh, okay. Okay, so if you look on, so again, pages 9 and 10 is current month and year-to-date for the general fund. On page 11 is your month activity and year-to-date activity for the debt service fund. And the debt service fund is only used for collection of your INS portion, which is the interest and sinking portion of your property taxes. And we also put all the penalties and interests that have been charged and paid by the taxpayers into this fund, and any interest that it earns on the tax pool accounts that are in the name of the debt service. And the expenditures are your debt service principal and interest. We have not paid, the principal is paid once a year, and we pay that in September. And so right now, it's only the interest. So you can see that, the interest that we've paid so far this year is only $2,400. Now, come September, we'll pay a little bit more interest and we'll pay the big principal repayment, which I think is around $185,000. And then we'll have one more year left to pay the last payment. The last, which really doesn't have, and then there's one more fund, which is the capital projects. I don't have anything in here on a detail because there really hasn't been any activity in the year. But if you look on page 7, you'll see that we have the general fund, which we've already gone over, the debt service fund, which we have already gone over, and we have capital projects. Now, once we have issued bonds, the proceeds from the bonds will go into that fund. And that
Which fund?
fund will then disperse out any payments related to the capital projects that have been approved and basically identified in the bond.
The fund is so,
She
and
said
again,
the fund, but,
yeah,
well,
the
I was trying
fund
not to
is-
ask questions.
yeah,
until
it's
we're
the
done,
overview.
Because I do have a lot of questions about that fund.
Of course. So, as a general overview, assume you have, you have 4 major accounts. One of which is your tax collections, which all is a pass-through account.
Right.
So then you have really 3 functional accounts. One is your general operating, which receives revenue from water and sewer revenues and also M&O tax rate.
Right.
One is your debt service account, which is only funded by debt service tax and can only be used to pay bonds. The third is your capital projects fund, sometimes called a construction fund. These terms are interchangeable. You might hear other terms for it as well. Those are where bond funds are placed. They can only be used on state-approved projects. So they are held in a separate account. They cannot be used for anything that the state has not approved for the use of those bond funds. If you change your plans after you sell bonds, you apply to the state to use those funds in that
Right.
way. So those are your 3 functional accounts. The tax account is your tax assessor, and you guys use Galveston. But it's essentially a pass-through, and you will receive the portion of your maintenance and operations tax into your operating fund,
Right.
and a portion of your debt service rate into your debt service fund.
Into your debt service fund, right.
And so, as Lydia mentioned, your annual budget is only your general fund or your operating fund. These are also interchangeable for those terms. Your debt service account is already lined up. You charge the tax rate your financial advisor advises to pay off your debt. There's really nothing to budget. And your capital projects funds are sitting there and wait. There's also no budget there. You just have a project plan for the use of those funds.
Well, you
So
can
there's
budget
not-
if you can budget if you so choose.
It's budgeted in the sense
Right.
that those funds are allocated
Right.
to that list of projects,
Right.
and then you monitor them.
And-
But it is
Right, right.
similar but different to your annual operations. I always try to start there with those 4 funds. That's
The tax, the water, sewer, the bond, and the capital projects.
yes.
Which page was the capital outlays? You said 7, was it actually on 8?
No, the capital projects, I wasn't talking about capital outlay. I was talking about the capital projects fund
Yeah, it was on page 7.
on 7.
It's the 3rd line from the left, and there's nothing in it.
Right.
Because there's nothing in that fund right now, or essentially
No
nothing,
activity.
yeah.
But if there's a bond issuance, those proceeds will go into that account
Right.
and will be monitored based on the projects. And what we normally do is we'll set up separate chart of accounts for each project, okay, if you have more than one, and then it will be tracked. And because it's cumulative and accounting closes out each year, I do a separate schedule where I bring forward the prior year's balances and then add on. And that's what I did with the last one, so that you can see the cumulative costs as we go from fiscal year to fiscal year if it's not completed in that year that we're working in. So you can have a cumulative cost versus the total budget for that particular project. This statement is also referred to as the statement of activities. And for governmental accounting purposes, this basically takes you from what they refer to as the fund level financials to an accrual-based financial statements. So the governmental fund concept is money's coming in, basically, it's pretty much very close to cash basis. So we take in money, we recognize it as revenue, we spend money, and we recognize it as expenses. So what happens is when we go from fund basis accounting to government-wide accrual basis, is that we now start to add depreciation on your fixed assets. We show your fixed assets, which in your case is primarily your water and sewer infrastructure, on your balance sheet, and you show your debt, outstanding debt on your balance sheet, and then you show how you take that fund balance and identify the fund balance is identified now as net assets and net position, and we break it out into the components of that. So to be in compliance with those requirements, we shifted over to this format a couple of years ago. And I don't spend a lot of time on this, but every so often, if you want to see how much money on a historical basis you have in your water and sewer operations, your balance sheet, which is on page 6, identifies this under your capital assets not being depreciated. And you can see off to the left those categories, and you can see where they're coming in as adjustments, and you can see what those numbers are, okay? Keeping in mind that this is historical costs and not what it's worth today, but historical costs, what we paid for. It also shows your indebtedness. So if you look under liabilities and fund balance, you look under long-term liabilities, due within 1 year and due after 1 year, and you can see that this year we will be paying out $180,000 for your debt service on
Right.
bonds.
Yeah, I seen that.
And that we still have $100 and some thousand left for next year, and then it'll be paid off.
183.
And then down below, you have your fund balances. And if you look on the fund level, so on the general fund, your fund balance for the general fund is $1.277 million. And if you compare that number to your total cash and cash equivalent, which is up at the top, you have a little over 1.2 million. So the rest of it is made up of all these other assets. Well, there's CDs also, so we have about 1.3 million. We talked about how much you should have in reserves, okay? And so the 1.2 million is, if you just look at this number of the 1.2 million, it translates into approximately a little over 1 year of your operating costs. Debt service, we have $383,000 in cash, and your fund balance is $326,000. We will have some money left over after all the bonds are paid for next year in 2019, and that amount will be used in the analysis on how much the tax rate needs to be. And Carol Palmer, your financial advisor, will use that. There's certain percentages of how much cash you should have to cover, and so that will just move on and make it better for the district in terms of the tax rates, moving forward when you issue bonds. And what
You're
we
referring
have
to the 5292? Is that what you're referring to? You said you're gonna,
5292.
in the capital
No,
projects?
no, debt
Okay.
service.
Oh, and debt service, okay.
Yeah, debt service.
Yeah, okay.
Yeah. We do have a small amount in the capital projects account right now of $5,292, but at this point in time, it's offset by amounts that's owed to the general fund for the same amount. So the bottom line is we've spent all of our bond money.
You can clean that up, right? You can
Huh?
make the transfer,
Yes,
the county,
yes, we'll close that out this year.
close that out.
Okay, so that's the basics of the financials. Now, also included in your package, on the very last page, is the investment report. And we prepare this for you every month. It's only required to be provided on a quarterly basis, but this board has asked for this every month. And this identifies all of your cash and investments and CDs for all of your funds. And you can see where, for example, you have Texas First Bank for your general fund at the end of April had $525,000. The general fund had Tex Pool balance of $703,000. And we have a CD that I think it's a 6-month CD at Hometown Bank. So those are your various cash and investment accounts for the general fund. In your debt service fund, you have a Tex Pool balance of $126,000. And you also have $166,000 in your checking account. And then also part of the debt service is the tax fund that Michael referred to earlier, which captures all of your tax revenues, and there's $91,000 in there as of the end of April. And then the two small amounts relate to the capital projects funds, checking account balances and tax pool. Now, TCEQ requires that your cash and banks be collateralized. So down at the bottom, you'll see where our total balances in our Texas First Bank is $788,000. And of course, we only get $250,000 for FDIC coverage. So the excess has to be collateralized. And they provide the board, the district, with a pledge security statement every month. And that pledge security is the this number of 1.3 million less 250,000 of FDIC coverage. So that the district is basically over covered by 551,000. And the reason being that they do that is because in the months of December, January, and February, when we have all the tax collections come in, the tax balances go way up. And so they allow for that. And periodically, they'll ask if the numbers, they see a consistent trend going down, they'll ask for a decrease in the pledge securities and to get some of them released, but I haven't seen anything recently, have you? But they have to get our approval to do that. And then this report is signed by the treasurer. And I'll put on file. When the auditors come at the end of the year, this is one of the things that they look at to make sure that we've complied with that, along with the training that's required for your investment officers. How often do you have to do that?
Every 2 years.
Every 2 years.
I did it last year.
You did it last
Current.
year, okay. Okay. Now, the one other thing that we provide you is, which is not in this packet, is just a basic brief cash summary of all the accounts. And beginning cash balance, how much money came in on all the accounts, how much money was spent. So, and we started providing that information mostly because a lot of people wanna know how much cash do we have, so you get to see that very quickly. So you have it by fund and then going across, and that's page one, what I give you every month.
I remember seeing that.
And then the other one that's not in here is the summary that we get from the tax collection office, Cheryl Johnson's office. And we get that every month, along with the detail of the activity that was collected by year. And then we have a summary that shows how much has been collected for the year by years. And then what is still outstanding. And that was the one that I showed you and circled, that we had about 94% collection on our current year's tax levy. And we'll go into that process starting in July.
July
We
we'll
will
start.
start that process
July.
for the 2018 tax year.
For the real property. Business personal property collections have already begun.
Okay. Can
Okay.
Sorry with you.
I answer-
Put you
entertain
the
questions?
four Bob questions,
No, I don't have a question.
okay?
Not unrelated to this, I had a question for Lydia. Earlier, she said she might want to delay that project, the wastewater treatment plant. Remember we met in your office? You thought we might want to delay that. Is that still your plan?
That was going to be up to the board.
Yeah,
You know,
but I
that was-
mean, what
yeah.
was your suggestion on that? You had a thought.
Well, that was gonna be related to what the board wanted to do
With the bond.
with the bonds, when they wanted to go in, because we talked, and I'm
Yeah,
assuming we're gonna
hurricanes
talk
and-
about more of this on Monday.
Right.
And
Monday's
what the
meeting.
board wanted to do with the $30 increase in the water sewer rate. And did she tell you that it was split between water and sewer?
Yep.
Okay, so I did put a summary of collections and, what has been billed and what we've recognized as revenue in the water and sewer fund for that related to that $30, and I'll present that to the board on Monday.
Okay. Oh,
On Monday, along with the related expenditures that we've paid so far, and, so that the board can use that to decide what they wanna do from here on. So we can talk about that on Monday.
So you're gonna.
That is actually something I must talk with you about at the end of this meeting.
Yep. We're gonna-
In
that's-
the anticipation of the meeting, of the regularly scheduled meeting, to prepare for any changes that will be made. And I have some additional pertinent information on that front, but it's nothing related to the budgeting.
Okay, Porter? All right, I want to go through some questions, and
Okay,
just because I'm somewhere novice on some of this stuff. On the last page that you talked about, page of the funds,
on the budget versus actual,
the ones,
Your
the
investment,
investment report,
the investment
Page two.
report, okay?
just for my own knowledge, the first one, the first Texas State Bank that's our operating account.
Yes,
That's
with
what
the
we
general
use?
fund.
General fund, or
Yes.
operating, okay. The next, Texas State Bank, which is 263, then that's the debt service account.
Yes,
So that money can only be used to retire debt.
yes,
Okay, and on that money, we have $166,000 in there. Is that true?
yes, just in that account.
In that account? Okay.
Yes.
Is that the bondish, is that the bond fund? Because
No,
we still
it's
have
not
two
the
more
bond
payments in the
fund.
bond fund.
No,
No.
those are taxes you collected to pay off essentially your mortgage. If you think about bonds as your mortgage on your facilities, you pay for your mortgage, specifically you commit to collect taxes from your residents. And your tax rate is made up of two components, your maintenance and operations, and then separately your debt service. Now, your your residents only see a total tax rate that they pay, but internally that is divided.
that's divided.
Okay.
And so the component of that, the number of cents that are committed as debt service can only be used to pay back bonds. Now, in budgeting, and we'll eventually get to this conversation, I'm sure, at some point.
Right.
You can supplement your debt service with any other funds. Operating funds can be used to pay off old bonds, retire them early, things like that. But when you charge a tax rate for debt service to your residents, that may only be used to pay your mortgage, your debt service.
Right, that's it, nothing else, right.
Your maintenance and operations, that component of your taxes and your water and sewer bills and everything else that is a revenue to the district can be used more generally. And it's a very, very critical component to your budgeting.
Okay.
So these funds are here right now, but if you do not have any debt service requirements in the future, you cannot charge a debt service tax rate.
Gotcha.
You're also, I believe, capped on your, this is getting into something I would like to talk about down the road, but if that answers your question, we can save that for later.
Okay, that's fine. I'm just so I can read.
No,
So
of course, it's takes a lot of repetition on this stuff.
Understand.
We'll have, ultimately, Michael and I can do another presentation, somewhere in July, August timeframe. where we
I don't want to
talk-
do another presentation. Come on.
Well, but it won't be on this, it'll be on the tax, on the
Yeah,
tax rate
well,
assessment.
that's gonna happen
Yeah.
anyway, I guess,
Yes.
in a few months.
Oh, when we start doing our budget meetings.
Right,
That's
when
when
you
we'll be
start,
discussing
you
that.
discuss the tax rates in the fall.
Right.
Okay.
And that will get a very good analysis of those components, so that's a
Right.
preview, I guess.
Okay. So the account 289 for Texas First, that's strictly tax revenue account.
That is the tax fund, so the only monies that go into this account are the monies that Cheryl Johnson's office collects for taxes in total, both the M&O and the debt service portion, okay? And then from there, we disperse it to the general fund for the general fund portion and into the debt service fund for the debt service portion of the taxes collected.
Those are those transfers that we see.
Yeah.
Yes.
Okay.
A
Yeah.
pass-through account,
Yeah.
there could technically be a zero balance in there, but it's just as it comes in, it goes out.
Right.
They pay a few bills out of there for expenses. That's why it'll never hit absolute zero.
Okay. Gotcha. And the 908 account is a capital venture account.
Capital projects fund.
So anytime we have a capital, like for bonds,
Yes,
for capital, that's where the money goes into.
yes,
And that's where the money's spent for.
yes.
Okay, so if we authorize $2 million bonds and we get 2 million, that's where the money goes.
That's where the money
And it
goes
only
in.
goes for the capital accounts, capital improvements that we designate.
That's exactly
Okay.
right.
Capital projects, correct.
Okay. Okay, you said that. I'm just going through the pages and I'll let John. On the balance sheet, you talk about, I didn't quite understand
Is that page 5, John?
on
Page 6.
page 6. You talked about long-term liabilities under total assets, under liabilities and fund balance.
Uh-huh.
You said due within 1 year and due after 1 year. So that's the two bond payments that we still have to.
Yes.
Right.
One that's due this year in September, which is that 180.
180.
And then the balance is gonna be due next year in FY 2019.
Okay, which means we still owe $301,000.
Yes.
Correct.
And so in the analysis that Terrell did earlier, where he's coming up with the possible different tax rate scenarios.
Right.
It included the payoff of this one.
Right.
Okay, because the assumption was because I asked him to dial in that the bond would be issued this year, okay?
Right.
So in 2018, we still owe this amount of money on the old bonds.
Okay.
So his tax rate calculation took that into account, that we
And you-
still had this much
And
outstanding.
when you get a new bond, you gotta pay the old bond off.
No.
No.
You don't have to,
They're
but it
separate. What
was-
happens is your financial advisor, the goal is keeping level or slowly reducing levels of debt. You will never get a balloon payment
Right.
with the structure, with a municipal financial advisor would never allow that, nor would anyone ever buy it. So, if you have existing debt, you might see that, for instance, if you had sold bonds last year, you might see a nominal, first year payment on the new bonds of like $25,000 or 15. And then once the old bonds were retired and that opened up your ability to pay more, then that would have layered in the higher level of annual payments to pay off the new bonds. And that is always how it is done, because the structure here is, one, nobody would buy a balloon payment bond, because what is your ability to pay a random balloon payment in 10 years?
Exactly, right.
So it makes sense for that reason, and also financial advisors work for the mud districts, work for the boards, and everybody who works for these municipalities, it's about lowering your tax payments. So if you can structure them in and lay them out flat, that's just the ideal structure of those.
On the, back on page 6, you show that we owe $301,000 left on the two bonds, on the bond.
Well, actually, it's more, it's the 180 and it's the 183.
Right,
Okay?
right,
So the 301 takes into account that reduction of
Oh,
that
gotcha,
62,000.
gotcha, okay, so it's,
just-
okay, 360,
Yes.
360 something, okay. Back on the accounts, that can only come out of the account number 263?
Yes.
Okay, how do we reload
Well,
that?
no,
We
no,
don't-
no, no. If you look at the investment, if you look on the investment report
Right,
that you were looking at earlier on the very end,
right,
it would come out of a combination of the debt service account, Texas First Bank, which ends in 4263,
right,
okay? And the text pool account
Right
above
above it.
that
okay,
of 126.
okay, that's the other question I got. What's textbook?
Okay, text, I'm gonna have,
I can answer that one.
yeah,
All right.
'cause
So
it's
tax
weird.
pool is it's an investment fund created for and by municipalities. And so it is something that only municipalities can invest in, and is a collective investment fund that the interest rates track the market very closely and change from month to month. And it's a great indicator of market rates, because unlike CDs, which you must be collaterally backed, tax pool avails you of that, but also fluctuates percentages of returns with the market. Unlike, for instance, I was going to strongly recommend the Hometown Bank CD you have at 0.4% does not match the market. But you're stuck in there until October.
Right.
So tax pool satisfies collateral backing requirements, which is really just something we never need to think about, because you have a professional bookkeeper and investment manager handling that. Those are requirements that must be done.
Right.
So it doesn't require too much thought. It's just once you know that it has to be done, public funds can't be at risk of loss, and that's what the collateral requirement is. So banks must pledge to back that. So for a CD, you
So
may
this
get a
is
fixed
pledged
rate. Tax pool follows the market. So really, for a long, and you try to diversify it, and that's what Liddy does. But tax pool just broke 1% after 4.5 years of being below 1%. They just broke it earlier this year. It's already up to 2. So that
It's only
avail,
up to 2?
yeah, around,
It is?
well,
I just looked at it about a month ago.
1.6.
Yep. Wow, yeah.
And it's going up, is the expectation, because Treasury, it follows the market.
Right,
It's the
right.
only investment you really have that will follow
Yeah.
Treasury market rates.
Yeah, T-bill.
Very, very conservative market
Right.
rates. Otherwise, you're locked in to things. Now, sometimes you want to be, and that's why they're diversified enough to get in some CDs. And then you're obviously, any operations account you got to cut checks from is going to give you nothing.
We have two tax pool accounts, one, two.
Different funds, one from your operating and one for your debt service.
That's
They must be kept separate at all times.
Which ones are operating, which ones are debt service?
I think it's in the second to last column there.
General,
Yeah,
got it,
so
got
the
it.
second one down is your
Got it.
general
Okay.
operating, and like I said, sometimes those are
Got it.
used interchangeably
Got
depending on who's writing what. And then your fourth one down is your debt service.
Good. So do we,
And that's
okay,
about separation, these funds cannot be commingled.
Right.
so when we get the bond money in, we choose to whether it goes into tax pool or for tax.
Correct, and you have an investment officer who you can designate. Now, this is brought here so you can kind of give guidance to your bookkeeper. And then Bob, I think you've been the investment officer. I don't know if you want to do the training anymore. You can designate a third-party investment officer. It's in my notes as something to discuss with you. Because Lydia, you might have somebody in your office who takes that role for other MUDs. If not, yeah. So you can designate somebody there, because there's about 10 hours of training every 2 years
Every 2 years, yep.
that somebody has to sit through, and you probably, by virtue of not doing this every day, even though you took the training, no
Right.
offense,
Exactly.
but you might be equally served. You're getting the advice anyway. Following your bookkeeper or their
So that's
professional
what we've
opinion.
done in the-
And by
that's-
getting this every month instead of quarterly, which has been asked, you can see where the rates are. And for instance, just like I said, hey, I see this CD is not a good rate. Let's transition to a different bank.
So from looking forward,
So you would have your capital projects funds, which right now are held in just essentially checking accounts. And then when you get them, you would put some, I would recommend you put the stuff you will, you know you don't need to use in the next 12 months in a 6 to 12 month CD. Maybe 25% of those funds. If you can get a good rate, and maybe 25 to 50% in tax pool, and keep 25 to 50% in a checking account for the payment of expenses on the projects that you are going forward with. If you are sitting in a design phase where you know you're only gonna expend $50,000 out of $2 million for the next, until 18 months from now, when you're ready to expend the $2 million, then I would put heavier on long-term, higher return funds. Now, there is something with bond funds that you can't make money on public funds. It's called arbitrage. If you ever make money higher than the percent you sold bonds, you gotta pay that difference to the IRS. Now, with these rates, that ain't gonna happen. Hasn't happened to any district I know in at least 10 to 15 years, but it is technically possible if you hold on to funds too long. But you really should try to be spending them on the projects they're for.
Right.
if we have another hurricane like Ike and we have to have repairs planned,
You can use those funds.
you can use all the funds.
You can use those funds. One, there's two components here. If the state has already approved a facilities project for you, you can use funds on projects that have already been approved. Now, if it's not pure surplus, you would make a change in scope application. And you might want to do that anyway, just to cover your tails on using bond funds. But those funds will be there and it won't change your financing, and if you need them, they can be used for your facilities. And it'll be a change in scope application, or if you've finished some projects and you have money left over, maybe a change or a use of surplus funds application. We combine them all the time. You apply to the TCEQ and use those funds. If you have surplus funds and you've got maintenance or operational needs for something that has already been approved by the state, we don't even have to apply.
Okay.
You can use them immediately.
Okay. All right.
So let's text, oh, I'm sorry. Go on.
Should I ask a question when you're talking about something I'm gonna be asking about here anyway, or should I just hold? Should I just wait? I have a question about
Good, what,
something he was just talking about. But I'll wait until.
okay.
Okay.
Um, look at my notes, I answered that one. On the operating, page 15 and 16. Was there or 17, was there a payment made in this fiscal budget on the bond, existing bond?
Not yet. I mean, we've made the interest payment,
It'll
but
be
we
paid
only,
in
but we
September.
only pay the principal once a year. And your fiscal year end ends on September the 30th,
Or September 30th?
and we make those bond payments on September the 1st, I believe.
Okay. Is that in the budget?
Well, it's accounted for, yes, because it's in debt service.
Okay. Okay. Do we have to transfer any money to make that payment, or is that payment already it sits in these investment accounts?
Well, it sits in, either in the checking account or the tax pool, so if we don't have enough in the tax pool, in the checking
Right,
account,
that's-
then Sharon usually says, is it okay for me to transfer the funds? And we say yes, and how long does it take? How long? 24 hours?
Yeah.
24 hours, the funds are there.
All right, that was kind of my, okay. And then, one question, just, I think I answered my question. On the general fund, page 16. And this is not a question about the report, it's just a question of saying, with the items that were way over, were those not accounted for as being, were those surprises in the budget? The budget that we developed, that was developed last year, were these all surprises?
Yes, because when we did this budget, the board approved this budget in most likely August of 2017.
Correct.
Okay? And we had, for example, whatever you see on your budget is what we thought we were going to spend for this upcoming year. Obviously, the bond issuance costs the district a lot more money than
Elections.
they were.
Come on.
Or, what do you wanna call it?
Elections. We haven't
Elections.
issued any bonds.
Okay. The
Nor does that
elections-
come out of,
Well, so
those
that-
Well,
funds.
the bond, when I say the bond issue, Michael, I'm talking about.
Oh, I know what you're
the
talking about. I
issues.
just wanna
Okay.
be clear, since this is,
I just
you know,
signed the
being
check.
recorded and everything, so the distinction there, and I know exactly what
I'm
you mean.
not saying it's the bond issue's cost, it's the bond issue, the
No.
bond election
Election.
issue.
So, the process there is you must have voter authority, up to a certain point, and then, in this instance, just for sake of easy conversation, so $5 million was authorized. You may now issue up to $5 million in bonds. You could sell 5 different $1 million issues or one $5 million issue. But that is an election expense. And in answer to your question about why the excess cost on that item, the inherent cost of having an election is anywhere from $5,000 to $15,000. You had 3
Right. Just-
that were all
Right.
that you caught in the tail end of the first one on this budget, and 2 more. So I just don't know. I guess when it's set early, the hope is, it's best expectations. I also always recommend not amending a budget after the first quarter. So if you know something is going to change 3 months into your annual budget, then you should consider amending your budget. It's a simple item, but for auditing purposes, I don't recommend amending a budget in the third or fourth quarter of the year, because it looks to an auditor as if you are fixing something that wasn't a problem.
Right,
It's the
we're-
best effort in the
Right.
in the first quarter is
We're
my.
required by law to work within that budget.
No, you are, No, you can run an intentional deficit, you can run an intentional surplus.
I was under the
It is
impression
your,
we were required to work within the budget that was set.
that is proper management.